Assalamualaikum, my name is Muhammad Amar Azib and I'll be talking about the introduction to Bosat Holding Berhad. Bosat Holding Berhad established at 1828, which is among the oldest and most varied companies in Malaysia. Bosat Holding Berhad core business activities are first off the plantation division, which is they engage in oil palm cultivation and palm oil production, leveraging sustainable agricultural practices to enhance competitiveness and align with global sustainability trends. Secondly, we have heavy industries, which includes shipbuilding, marine engineering, and defense manufacturing. Subsidiaries like Bostat Naval Shipyard Sdn Berhad contribute significantly to Malaysia's maritime defense capabilities through government contracts. Thirdly, we have property development, which addresses the demand for residential, commercial, and industrial properties in Malaysia's urbanizing areas. Fourthly, we have pharmaceuticals, which operates through Pharmaniaga Berhad, a leading manufacturer and distributor of healthcare products in Malaysia. Lastly, we have trading and industrial activities. It involves trading in building materials, heavy equipment and automotive products. Boosted Petroleum Marketing Sdn Berhad, which known as BHP Petrol, significantly contributes to revenue through its network of petrol stations and petroleum products distribution. Next up, we have recent developments of Boosted Holding Berhad. Firstly, we have strategic restructuring for efficiency and profitability. Boosted Holding Berhad has implemented comprehensive financial restructuring efforts aimed at optimizing cost structures, improving operational efficiency, and enhancing overall profitability. These initiatives include streamlining processes, reducing overheads, and reallocating resources to high return areas within each business segments. Secondly, we have focus on sustainability in plantation operations. Bosat Holding Berhad emphasized sustainability in plantation operations through the adoption of environmentally friendly practices. Secondly, we have investments in sustainable agriculture techniques not only align with global trends but also enhance cost effectiveness and market competitiveness. Thirdly, these initiatives aim to mitigate environmental risk and regulatory challenges while appealing to eco-conscious consumers and investors. Lastly, we have investment in digital technologies for operational efficiency. Bosat Holding Berhad launched strategic initiatives to digitalize operations across various sectors, including enhanced data analytics, automation of processes, and digital marketing strategies. The integration of digital technologies is expected to drive operational efficiencies to reduce lead times and also improve customer engagements and satisfaction. This digital transformation agenda positions Bosat Holding Berhad to adapt swiftly to market changes and capitalize on emerging opportunities in the digital economy.
Right. We'll start with our financial data. We'll start with the balance statement. So we collected from the year 2021 up to 2023 for the non-current assets. We've got property, plant and equipment, investment property, right of use assets, investments in joint ventures, trade and other receivables, deferred tax assets, total non-current assets. So we start with, in 2021, there was 6,056,000. 2022 was 5,117,000. And for the year 2023, it's 5,165,000. So 2022 and 2023 roughly had almost the same. But in 2021, they had the highest, and that is for most of the assets as well. And as for current assets, our inventories was the opposite. In 2021, it was at its lowest due to its sale. So in 2021, it had 2.9 million. 2022 was 2.9 as well. And in 2023, it was 3.5. And then trade and other receivables, it had the highest in 2021 and over 100 million, 101 million. In the year 2022, it only had 7 million. And also in 2023, only had 7 million. And this was because in the year 2021 was when they had the most stock and sale before they did a major investment. Contract assets, roughly the same, tax recoverable, cash and bank balance had its highest in 2021 at 4 million. And then in the following year, it was almost 50% at 2.6 million. And the latest at 2.3. And as for the total of the current assets, is 115 million. And for the year 2022, 108 million. And for the year 2023, a little rise at 111 million. And as for that, the total asset is 455 million for the year 2021. For the year 2022, 484 million. And for the year 2023, 483 million. And as for our income statement, the revenue in the year 2021 was at 149 million. 2022 was 141, and the year 2023 was 126. Major operating costs came to 103 million for the year 2021, roughly the same in 2022, and a little more in 2023. And as for allowance, it was at its highest in 2023 at 25 million. 258 million. This was its biggest investment for the time. In the year 2021, they were maintaining during COVID, just the management. So it only equated to about 9.5 million. In the year 2022 is the recovery of expansion at 32 million. And in the year 2023 at 258 million. These are the results from operation. In the year 2021 and 2022 came to a positive at 36 million, at 5 million. And of course, in the 2023 was at a minus of 244 million. And the interest income is highest at 2023 at 238, 65,000 in 2022, and only 86,000 in 2021. These are the finance costs, share results of joint ventures, loss before taxation. Again, in 2021, it was a positive at 18 million, sorry. In 2022, it was at 7 million. In 2023, it was this whopping 256 million. Income tax expenses. Loss for the year is the biggest one. In 2021, it came to a profit of 15 million. In 2022, there was a decline of 19 million. And in the year of 2023, it's biggest at 265 million. And that is, as for the loss per share, that was a gain in 2021, the only year, and the following 2 years had a declining of 8.02 and 105.93. Financial statements, inclusive of the balance sheets, cash flow statements, the ones that we just saw for BHIC, were collected from the official website's reports with the links as follows. The most relevant information from the statements is available to view in the appendix section of this report. These are the ones that we used in our report for all parts in our assignment here. Thanks.
Now I'll be talking about part 5, which is financial analysis. For current ratio, using the formula current assets divided by current liabilities from 2021 to 2023, the company's current ratio improved significantly from 0.41 to 1.33. Next one is quick ratio. Using the formula current assets divided by minus inventory divided by current liabilities, the company's quick ratio improved from 0.4 in 2021 to 1.31 in 2023. Next one is cash ratio. Using the formula cash divided by current liabilities, the company's cash ratio improved from 0.1 in 2021 to 0.62 in 2023. Next slide is about inventory turnover ratio. I'll be using the formula cost of goods sold divided by average inventory. The inventory turnover ratio showed stable and healthy growth, showing values of 34.11 in 2021, 35.29 in 2022, and 51.42 in 2023. Next one is receivable turnover ratio, using the formula sales divided by average account receivable. The receivable turnover ratio improved from 0.8 in 2021, 1.72 in 2023. Next one is payable turnover, using the formula cost of goods sold divided by average accounts payable. The payable turnover ratio remained generally stable, showing values of 2.3 in 2021, 1.2 in 2022, and 1.9 in 2023. Next one is total assets turnover, using the formula sales divided by average total asset. The asset turnover ratio generally remained constant from 0.34 in 2021 to 0.33 in 2023. Next is about total debt ratio. Using the formula total liabilities divided by total asset, the company's debt ratio improved from 0.82 in 2021 to 0.44 in 2023. Next one is debt equity ratio. Using the formula total liability divided by total equity, the company's debt equity ratio decreased from 4.65 in 2021 to 0.88 in 2023. Next one is about equity multiplier. Using the formula total assets divided by total equity, the company's equity multiplier decreased from 5.65 in 2021 to 1.8 in 2023. Next is times interest earned ratio. Using the formula EBIT divided by interest, the times interest earned ratio decreased sharply from 2.35 in 2021 to negative 11.41 in 2023. This slide is about profitability ratio. For profit margin, using the formula net income divided by sales, the profit margin declined from 0.1 in 2021 to negative 2.1 in 2023. Next one is return on assets, using the formula net income divided by average total asset. The return on asset decreased from 0.03 in 2021 to negative 0.0 in 2023. And the last one is about return on equity, using the formula net income divided by average total equity. The return on equity declined from 0.21 in 2021 to negative 2.47 in 2023. And last one is about market ratio. For price earning ratio, using the formula price per share divided by earnings per share, the price earning ratio was 7.84 in 2021, negative 4.69 in 2022, and negative 0.46 in 2023. And last one is market to book ratio, using the formula market value per share divided by book value per share. The market to book ratio increased slightly from 1.48 in 2021, 1.76 in 2023, indicating that the market value of the company equity relative to its book value has improved over the period.
Hello and Assalamualaikum. My name is Harith, and today I will be presenting part 6, which is the interpretation of financial analysis. So the competitor that we have chosen is Marine and Heavy Engineering Holdings Berhad, also known as MHB Malaysia for short form. There are a few types of ratios that we will cover. So starting with liquidity ratios. So under there is current ratio. The higher the ratio means the better the company's liquidity position. HIC showed consistent progress, even though it was lower than the competitor in 2021 and 2022. They only managed to be higher than MHB in 2023. Next is the quick ratio. The trend for both BHIC and MHB is similar to the current ratio, whereby BHIC struggled in the first 2 years but had a significant improvement in 2023. Moving on, so we have the activity ratios. So under this, we have the inventory turnover ratio. The comparison in the table shows that MHB is able to sell on a much bigger scale compared to BHIC throughout the 3 years. However, it can also mean there is insufficient inventory to supply the big sales for MHB. Then we have the receivables turnover ratio. So the difference is not too drastic for both companies except in 2021, suggesting that they are effective at collecting their customers' balance. Furthermore, the type of ratios is debt ratios. Firstly, under it is the debt to asset ratio. The ratio for both companies is quite healthy, whereby they are not significantly infused with debt to the point they can't meet their obligations. Secondly, is debt to equity ratio. The ratio for BHIC is significantly higher compared to MHB in 2021 and 2022, suggesting that they had more debt that cannot be covered by their equities. So now, this is the comparison table for profitability ratio. So to start, we have the net profit margin, and the figure is in percentage. So the figures shown is very consistent for both companies throughout the 3 years, as it does not paint the full picture when there is a one-time expense or sales that will fluctuate the percentage. Next, we have the return on asset, and the percentage was in the normal scale for BHIC in the first 2 years, showing that assets available is well proportionate to the profits return, but saw a drop in 2023. It's contrary for MHB. Final, for profitability ratio is return on equity. So BHIC showed good numbers for 2021 compared to MHB, but went on a downward trend. This indicates BHIC heavily relied on debt rather than generating cash. Lastly, you have the market ratios. So the ratios chosen is to compare market to book ratio. In all 3 years, BHIC had a ratio more than 1 and is higher compared to MHB, meaning that the market is overvaluing the stocks from BHIC. So it is highly likely the price of BHIC stocks will fall. So that's all from me. Thank you.
Hello, my name is Muhammad Ali Imran, student ID 12313011147, and I will be presenting for Part 7 and Part 8, the investment analysis and recommendations, as well as the conclusions later on. So as for the key financial ratio comparisons, let's do a quick recap. Historically, BHIC has had issues managing its working assets as its liquidity ratios were negative or less than 1, rather, but subsequently improved in 2023 to greater than 1.0. Despite this improvement, however, the current and quick ratio tests show uncertain performance, indicating a level of volatility in BHIC's ability to meet current liabilities with current assets. BHIC has demonstrated considerably poor profitability throughout the 3-year period, in which the most recent years resulted in a net loss for the company, as its return on equity has dropped from 21% to negative 247%. Its return on assets has dropped from 3% to negative 70%, and its profit margin has fallen from 10% to negative 210%. Though its competitors, MHB, for example, showed a similar loss position, the returns margins are much healthier than what BHIC has had to offer, indicating that the company in question is having more of a struggle. As for the debt ratios, significant debt concerns also jeopardize the company's financial position. Though BHIC has managed to lessen the reliance on debt in 2023, it still falls short to its competitors' debt-to-equity management. For example, the historical trend for BHIC's debt-equity ratios from 2021 to 2023, respectively, for each year, been 4.65, 6.65, and 0.8. So historically, we can see that BHIC has had more debt to equity, and though it improved, this condition is still not as good or not as preferable as the competitors Debt to equity ratio, and the company in question here is MHP, and it always had a more equity to debt throughout the past 3-year period. Moving on to the market ratios, earnings per share has deteriorated to a loss positions per share of approximately negative 1.0593 ringgit as of 2023. Despite this, the company's price to earnings ratio, price to sales ratio, and price to book ratios have remained in a stronger position than its competitor. The company also has a falling total enterprise value of 252.34 million ringgit compared to its competitor's enterprise value, which has grown higher. Hence, the investment decision. We have concluded that the best investment decision is to sell the stock due to the company's concerning financial position. Although certain measures from the company prove to be healthy or improving, such as the liquidity ratios and market ratios, the overall performance of the company does not match its competitors. Additionally, the company is on a downward trend, continually earning net losses over the years with deteriorating profitability margins, and subsequently the return on assets and the return on equity and the return on assets. Selling is recommended as to avoid the risks associated with the company, as it is unlikely that the investors can expect a high return due to debt costing as well as low profitability. Moving on to part 8, the conclusion. First, a summary of the report. We have identified and described the Malaysian company, Boosted Heavy Industries Corporation Berhad, BHIC, detailing core business activities, recent economic developments, and financial results. Using the information acquired through the financial statements, we have calculated, analyzed, and interpreted the historical financial ratios to date to gain a better insight into the company's performance, efficiency, asset management, debt to equity financing, etc. We have since compared the company's financial performance with that of its industry or competitor in an effort to understand its relative performance within its sector. And our findings, by using the financial analysis and comparison, we have identified the strengths and weaknesses of the company from a financial standpoint, including the company's historical over-reliance on debt financing, falling profitability rates, and underwhelming stock performance overall. Overall, the information has resulted in a recommendation to sell the stock, as the risks borne are greater than the proposed benefit potentially acquired through receiving future profits from the company. That is to say, the importance of a financial ratio analysis or a historical financial analysis is to be able to gain a better understanding into a company's overall financial health, its efficiency in transforming sales into revenue, into generating profit or return, or paying dividends to its stockholders, etc. That will be all from me. Thank you.